Good afternoon, this is Sean Golding with Golding & Golding, here to discuss a common situation we deal with often in the world of offshore disclosure and international tax compliance. Is what do you do if you're a U.S. person, you have to file a U.S. tax return, you earn some foreign income, you pay tax over there, right? Doesn't seem fair that you have to pay double here. And so what happens is sometimes you can apply foreign tax credits. Individuals use Form 1116, entities 1118, unless your individual made certain guilty elections. This is a simple, basic introduction for individuals, so we won't overwhelm anyone. The concept in the U.S. is they follow a worldwide income model, which is absurd. What it basically says is if you're a U.S. citizen, lawful permanent resident, or foreign national who meets the substantial presence test, typically you're on H-1B, B-1, B-2, L-1, O-1, etc., and you're in the U.S. and you meet the substantial presence test, you're taxed as a U.S. person. That means the U.S. is going to tax you on your worldwide income. Doesn't matter that it's sourced overseas. Doesn't matter that you earned it while you were living overseas. You also have to do global asset and account reporting as well, but that's not for today's focus, right? So U.S. person, worldwide income, global reporting. What happens if you already pay tax overseas? So Jennifer lives overseas. She earned some employment income. She paid taxes over there. And now she doesn't want to pay taxes on it here. Let's go through the basics, right? With the Form 1116, it's not necessarily a dollar for dollar tax credit. It tends to work best dollar for dollar when people reside overseas full time. But generally what you do is you take the different foreign tax credits, income sources, and put it in different buckets. So you've got employment, general category, passive, your dividend, interest, royalties, things like that, in a separate bucket, and then there's other more complicated buckets, HTKO and stuff like that. But you put it into each nice bucket, okay? And you can apply each bucket to what you do. There's really no overlap. When you get really deep into the exceptions, exclusions, limitations, sometimes there's a bit, but typically not. So in a perfect situation, you owe, let's use numbers, it makes it easier, right? Let's say you pay $25,000 in tax overseas, you owe $25,000 in tax here on that same income when you calculate it, and it works out to zero, you owe nothing, yay, right? Sometimes you pay too much in a foreign country, the tax rate's higher, and then when you apply it here, you have leftover. Well, you can't use the foreign taxes you pay to reduce income, like to get a credit back from the U.S. government. Someone goes, hey, I only owe $19,000 here, so I should get the rest of it credited from the U.S. government. They're not going to do that. It's creative, but they're not going to refund what you paid to another country here in the U.S. And often is the case, you don't have enough foreign tax credit. You can apply up to what you got, and if you've got carryover from the prior years, because you can carry it forward, then you can use that to offset it, to bolster it and maybe bring it down to zero. If not, then you just pay the difference. Typically, you have to file the Form 1116 if it's less than $300. I mean, unless it's less than $300 for an individual, $600 for a married filing joint. Here are some common questions. Can I use the foreign earned income exclusion and the foreign tax credit together? Yes. You know, if it's separate categories, it doesn't matter, but the foreign earned income exclusion is specifically for general categories. So let's say you earn $170,000 overseas and you were in a 30% tax bracket overseas. Well, you can use the foreign earned income exclusion up to the first, I think it's like $108,000 now, and you do the calculation off the top of my head. I believe it's foreign taxes paid over the exclusion amount. Multiplied by the exclusion amount over the total category of income, and then you have to reduce the amount of the foreign tax credit because you can't double dip, right? You can't use the foreign earned income exclusion and the foreign tax credit on the same dollar, but you can use it the same income category if you have sufficient left. So if you're in a really low tax jurisdiction, chances are you may not have sufficient tax credit left. If you're in a higher tax jurisdiction, then you might. Another common issue is HTKO, high tax kickout, excuse me. What happens is if you're in too high of a tax bracket overseas, like especially with passive income, right? Let's say they charge 50% on interest income, which is way higher than 90% of anything that they would do here. Well, then what happens is it gets kicked into the general category. You can't use it for your passive income. Audits are becoming a lot more common as well. We've had lots of clients approach us when they're if it's more than $50,000 in foreign tax credits, the IRS wants to know about it, right? You got to kind of prove that you paid it. You can't just say, I paid $150,000 overseas and expect the IRS to just believe you. They should, because you're an honest person, but it doesn't mean that they will. And so they'll audit you. It's not really, this happens a lot in offshore disclosure. It's not like a willful, non-willfulness audit, but it's something to be aware of. Oftentimes, foreign tax credit issues impact things like offshore disclosure. Like I said earlier in the presentation, if you're on the worldwide income model, a lot of people aren't aware. Lawful permanent residents and other non-U.S. citizens still have to report foreign assets, accounts, investments to the U.S. government. If they don't, they're out of compliance. There's various programs. There's the voluntary disclosure program if you're willful, or you can't certify under penalty of perjury if you're non-willful. Otherwise, there's things like the streamlined procedures, delinquency procedures, and reasonable cause. We've got a ton of free information available on our main website and our sub-website. You can always reach out and schedule a reduced fee initial consultation if it's appropriate, something we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.